Good evening. This is the Elliott Wave daily update for the NASDAQ 100 and the S&P 500 for Thursday, June 6th, 2024. Again, not much to be adding to current analysis. So I'm going to begin here with the NASDAQ, and I'm on the 1-hour chart. So again, no changes here. We still have the minuet wave 4. That low was put in on May the 31st. And from there, so actually a week ago. And so what we have is sub-minuet 1 and 2, and then sub-minuet 1 and 2, and then this magnificent third wave up, which I likely am going to, and I told myself to do it, and then I didn't, so let me just put that in. I believe that small 3 is in place, and that we're involved with the small fourth wave. And so what we have, let me just finish getting this put in there, is it's still in progress. And just using standard fibs that go along, so the retracements that would go along, because this was so large, that we're basically looking for at least a move back down towards 18,979. Now, we got down to 19,018 this morning, and actually this afternoon. And then, of course, the market's kind of bounced right up and off of there. Now, whether that completed it or not, yet to be determined. And now we can see that, at least on an hourly chart, that we're still just kind of working our way lower, but they managed to bring it back to a moving average, which in this case is the 13-period moving average, and holds steady right there. So here's what I'm leaving for tomorrow. Now, again, tomorrow is the day that after the market closes, that NVDA will split. So I believe, of course, then this is going to be the final day that we'll get the benefit of, if you want to call it a benefit, of the higher volatility, or in other words, how fast the market is moving due to the larger swings that are taking place in NVIDIA. For example, today, that was the case. And just to kind of recap, NVIDIA had opened at 1,240, traded up to 1,255, and had a low of 1,183. So that's a pretty big range once it hit its high to drop all the way back down, and then to rally back above to close again above 1,200. So with that in mind, once this happens, again, I'm just going to explain that once the split is complete and it's done, then wherever NVIDIA closes, say, for example, we'll just use today's close, the market would then start on Monday at, we'll call it 121, which is just rounding this up. And I don't know if the computer would actually do that or not. So, but it'll come down by 10. So for every 1 share that whoever has now in NVIDIA, come Monday, you would have 10. So if you have 100, you'll have 1,000, etc. So we're seeing a lot of posturing, a lot of positioning, and etc. And with the options that are also expiring tomorrow, that's just going to add to the mix. Now, when that is complete, then I think that we're going to see the speed in our moves and how things are really flipping and flying around slow down a little bit, and the volatility will be coming out of the market, or the vol will be coming out of the market, and other stocks will be taking over, and likely it'll fall back towards Apple, Microsoft, Meta, the other top stocks within the Mag 7. So, and again, getting back to the broader market, which of course is the NASDAQ, this index, is that what I continue to look for is a small 4 to be put into place, Again, can't really say if that is it or not because of the lift that did not happen. We did recover off of that level, but then again, we didn't really fly up off of that level as one would anticipate. You can see we got down there and then just hovered. So if this truly was the completion point for 4, then we should really start to move higher and be more consistent with it rather than just kind of up and then sideways. So once again, I'm just kind of going to hang in there, leave open the potential that the market will drop one additional time. So in other words, we have an A, a B, and then we're working the C wave down, or an A, a B, and excuse me, A, B, or A of B, B of B, C of B, so we can come all the way back up to 19,107, and then come back down. So there's a couple of versions of what we can consider what's going on inside all of this. But we're leaving open the potential that we can come down one more time, at least get below 19,016, and possibly closer to this 0.236. Once that's in, I can put the 4 in there, and then we will run the last fib for this particular sequence, and that would take us up to wherever this 4 comes in, and then we'll get our measurements for the small sub minuet wave 5. Now, as it stands right now, and so these are the correction going down, and this would be the upside for wave 3, what might be left, and that would be wave 3, but I would transfer it over and leave it in place for a 5th wave. So, because right now, I don't think we're going to come up much different. And let's just take a look and see what we got. And these are just guesstimates. But let's say we kind of come in here. Well, you get 100% at 19,212 and 618 at 19,122. And you got this other one right there. So I think it all kind of remains in line with what we're working on. So we still have additional resistance at 19,000, or this window or this cluster is 19,135.42 to 167. And that I think is the cluster that I believe will be able to contain and complete the smaller 3rd wave, the smaller sub minuet wave 3, right? Because we're working on, we get the 4 in, we work on the 5, that completes the sub minuet wave 3. We come back down again, and then we go back up in that sub minuet wave 5, and that then completes minute wave 5, and that completes up the line. So I continue to look for this all to complete. And as I have been discussing, I really am feeling that it could roll, not necessarily NVIDIA, but it could roll into next week because the focus, not that it's already there because I believe that it is, the focus is turned to, we had the Central Bank of Canada cut and the European Central Bank both ease rates. They cut rates. And so that leaves the other, which of course is the Fed, to make their decision. And if we're taking a look at the bond market, it remains pretty steady after having moved higher. And in that one, it does kind of revert back to where a rate cut would fit the wave pattern that it's currently in, which is a C wave up. And it has much higher levels to reach in order to complete that move. Now, back here, so the Fed meeting is, or the results we'll find out of that meeting is next Wednesday, June the 12th. And so that'll be a much anticipated, and again, I believe will contribute to what the markets are going to do moving forward, whether that would then pull this all in and we complete this a larger move. And again, just to kind of recap that real quick, if we go back out, we're looking for that minute fifth wave to finish up. And once that's done, what are we looking at? Still, I want to say we're still, in my opinion, I may move this to 1, 2, 1, 2. So in other words, we have a intermediate 1, 2, a minor 1, 2, and then a minute 1, 2, and then this all still remains 1, 2, 3, and on a minute degree. So minute 1, minute 2, minute 3, minute 4, and we're putting in that minute 5 to complete minor wave 3. And I've not made that choice just yet, but I'm leaning heavily towards it rather than the larger intermediate degree. And the difference, the big difference is that if the S&P, I believe, will be completing a minor third wave, and that puts the S&P in line to drop into here, which will be significant in and of itself. So again, a lot of calls are being put out there where analysts are looking and kind of looking towards and expecting the possibility that we will get a fourth wave correction, but that correction they're calling is like a 5 to 10% correction, and that just kind of puts us back right here versus what would be a larger correction putting us back here. Now, interestingly, if we're hanging out till Wednesday and they do something that might be even lukewarm, so a lot of it is just going to be on how Powell really handles that press conference and what the tone will be, because it truly, that's what the market will go off of. And so again, here we sit and here we wait. But I just, on an Elliott basis, it does appear that we're finishing a minute fifth wave up of likely either going to be minor wave 5, which gives a much bigger correction, or minor wave 3, which is still a big correction, but not as big as coming all the way down into here. Now that's the big picture. So back again, let's just recap. What I'm looking for is we're leaving open the possibility. Now again, on this chart, it does kind of look like maybe it did. Put a small 4 in there. And then we'll go up and we'll finish this tomorrow. And then that will finish the sub-minute wave 3. Now that one, believe it or not, does come in a lot higher. So if we get an explosive day for NVIDIA to finish and it then spills over, and we get an explosive day in Apple, and we get an explosive day in Microsoft and Meta and down the line, then yes, there's a possibility that we could add a 200 to 300 point rally. Don't forget, we're closing at 19,069. And this is just about 200 points up from where we closed. And that would be the 1.618 reading for the sub-minuet wave 3. Excuse me. So leaving open all those possibilities, either coming down or we're done and we just continue to rally. So if we come in and Globex starts and they start pushing higher, the minute they start going above that high, then we have to consider that the wave 4 is done. And so that high being 19,124. So it goes 125, 126 and starts heading higher, then it's a pretty good sign that the wave 4 is done. All this comes off. We focus on the above. And once again, just to kind of give a little bit of a thought process, I'm going to move this one to show you. Thank you. And there it is now. Okay, so let me grab that and put it right there. So even if I put it there, let's say that 19,016 or 17 completed that small fourth wave. What we're looking for, you can see, I got to redo at my levels because on this one, we didn't have much. And we're going to go to the 1 and the 1.618. I think 618 is coming in too low, but let's take a look. And so we're going to change our color so we're all color coded correctly. And that is there. And then we'll say, okay, see how much it does bring it in. And we're 62% or 618 comes in at 19,166, which is again, kind of at that top level of that resistance cluster. Next up would be going back up towards this. So again, we got two in favor of the market kind of reaching 19,258 to 267. Excuse me again. And therefore, so both of these are very high candidates to complete not only this sub, but also the sub minuet wave 3 and set us up for another drop down in terms of a wave 4. And then we still have that wave 5 up to complete minuet wave 5, minute wave 5. So we still have upside to go before a larger fourth wave would be due, or a larger corrective phase will be due. All right, moving on over, moving averages, by the way, all sitting very cleanly in. And so let's go take a look at the S&P. And same situation, except this one actually looks a little bit cleaner, that we have that possibility that it is done. And what we got going on here is this computer that just doesn't want to figure this out with me. All right, so let's go this way. All right, so there is our third. And then this came down, and it did sink just below 0.236. And ABC kind of looks pretty good, and it rallied strongly back again. The finishing pretty good. So two ways, same deal. I got to leave open the potential that we come back one more time and maybe get a little bit deeper into this zone for the small wave 4, or it's done and we just start to launch from here and we start to go up. I have marked for that wave 4 is there, and that we're looking at what would our fib relationships be for wave 5 as it pertains to wave 1, as it compared to wave 1. And 618 comes in at 5380. 100% comes in at 5400. And then this particular third wave, well, 5421 is 1.618. 100% obviously is going to be down here, and so it's already been knocked out. And just to kind of confirm that, we'll go over here and we'll just say, let me see what this one does. See where it is? It's all the way down here. And so we already went through it, and therefore it is no longer valid. So what comes up next is 1.618 on our fib scale. Doesn't mean that that's where it has to go. Because remember, 3, 4, looking for the 5, and that would suggest that that 3 completes with it. So whether it's here, here, or here, we're seeing what the capabilities of the market may be. This one I don't think is going to really come into action tomorrow. That's a pretty strong rally. Not saying it can't happen, because obviously it can. Now, then we would again, here in the S&P, let me just review very quickly. Here we have 1, 2, 1, 2, 1, 2. So we're finishing up a minor third wave up here. So here's minute 1, 2, 3, 4. We're looking for that minute fifth wave to work its way into completion. Now, so there we go. And within that minute fifth wave, we've already gone and done minuet waves 1 through 4. So we're minuet wave 5 of minute wave 5 of minor wave 3. The minor wave 3, 3.628, has already been taken out. In fact, I am going to remove that for now and leave all that alone, because wherever this is going to finish, it finishes the 5s and will also finish that minor wave 3. So I don't want to clog up our chart. Let's clean it up a little bit. So just dealing with what we have right in front of us. So in fact, this one has already been taken out as well. And so while it can still produce maybe some, I'm going to remove it because it's not pertaining to the wave pattern that we have. So come on, we're going to remove that. So now all we have left, we have this one, but you see it's up there. So here's the picture. Leaving open the potential that we drop back down below 53.46, below that low, which was 45. And we start heading maybe towards 53.41, which is where right now the 50-period moving average is, the hourly. And then we have 53.30 underneath that. And I'm pretty confident that that is likely would control the downside if we're still due more downside. So in lieu of that, we consider that today's low did put in that small wave 4, then I'll be looking for the rally to continue, and a clear sign would be, of course, a break above 53.73. Once we start breaking above 53.73, it should be pretty clean sailing up to 53.80, which would be the first. But then again, we'll be looking at the structure. If the structure only shows 1, 2, 3, then we know we get a little 4, and we're probably likely going to end up somewhere in between, but maybe as high as here. Now, 54.21, that is the full if it goes 1.618. If minute, a sub-minuet wave 3 goes 1.618 times the length of sub-minute wave 1. And so that would take us all the way up here. But more important, again, will be this structure. Once we get 5 complete, it will complete that third. Whether it's here, here, or here, it will complete that third. All right, that's really about it. Now, again, let's just take a look at what we got tomorrow. Economic data, it is kind of a full calendar. We have non-farm payrolls, which is the U.S. employment report. That one actually is likely going to create some type of reaction. That's what my anticipation is going to be on this one, because it's important, because of the Fed meeting next Wednesday. So that comes out at 8:30 a.m. So we get the employment rate, we get the hourly wages, etc. Then at 10 a.m. we have wholesale inventories. 3 p.m. it has in the past once in a while really caused a riff in the market, in pricing, and the rally or decline, is consumer credit. And that's coming out at 3 p.m. Eastern. And estimates is that it's going to increase by almost $4 billion. So consumers are out spending tons of money in the last reporting in May. That's quite amazing, but that's what it could show. All right, so that's going to be it for today's update. The next daily update, of course, will be on Monday, June the 10th, and I will look over the weekend to get a weekly update put together and out, and that at least will tie in whatever takes place tomorrow, and then looking out to next week. So I hope everybody has a really great trading day tomorrow and has a great weekend.